It's time for Talk Law Radio with Todd Marquardt. Todd Marquardt, attorney at law in Texas. If you're a millionaire or a thousandaire, Talk Law Radio is now on the air. Call in with your business law question, your elder law question, veteran aid, Medicaid, build a business to get paid. 210-308-8867. Or ask a question online at marquardtlawfirm.com. That's MARQUARDT lawfirm.com. And now it's Talk Law Radio with Todd Marquardt.
Welcome to Talk Law Radio. I'm Todd Marquardt. On the radio, on podcasts everywhere, on Facebook Live, and on YouTube. Go to YouTube and search for Talk Law Radio and look for the Lady Justice with the red, white, and blue logo and click subscribe. Today we're going to be talking about business loans with Mike and Laura Pierce. Welcome to the show. Thanks for having us.
Yes, thank you.
Before we get started talking about business loans, I want to remind everyone that I'm licensed to practice law in Texas, and the State Bar of Texas wants attorneys to inform the public about the law, but because legal advice must be tailored to the specific circumstances of each case, and because laws are ever changing, material discussed in this program is meant for general informational purposes only and is not to be construed as tax, legal, or investment advice. Marquardt Law Firm sponsors our show, and attorneys at Marquardt Law Firm focus on business and estate law, including last wills, living trusts, and tax-protected inheritance plans. Also, new businesses and old businesses which might have issues with corporations, contracts, LLCs, family limited partnerships, and we can represent those who are facing problems from lack of planning, like in district court, county court, and probate court. Before we get started talking about the law, let me begin with prayer. Dear God, thank you for this day. Thank you for all the gifts and blessings that you give to us. Please forgive us for our sins, for our mistakes, for doing the wrong thing or failing to follow your will. Please help Mike, Laura, and me give good information to the listeners about loans, lending, and business today. Help us to do everything we do for the good of your people and for our own good and for your glory. In Jesus' name, amen.
Amen.
Now it's time to discover your legal issue blind spots by listening to me talk about the law on the radio with Mike and Laura. Mike and Laura, you're married, right?
Yes.
And you work together.
Yes, we do.
And you've been doing that for a long time.
24 years now, I think.
I have to tell you a story about the day that my wife and I worked together.
The day?
Yes. I had worked for an attorney, and we were building up his law firm, and I asked him if I could be partner, and he said no. So we separated, and I was working for myself, and my wife was working part-time and going to school, and I said, well, maybe you can come into the office and help me with some things. And I don't remember what it was, but I asked her to do something, and she said, don't tell me what to do. And I said, well, I don't know how we're going to work together because you don't know what to do, and if I'm not allowed to tell you what to do, then this isn't going to work. And she said, that's fine by me.
Well, we've been very blessed to be able to work together. I mean, we've known a lot of couples who have worked together in business and it hasn't worked out. They start and then they decide, nope, this is just not going to work. But we've been very blessed. We have worked basically. We got married, and right after we got married is when we started our first business. And since that time, we have worked hand in hand, and it's never been a problem. And really, we always kind of tell each other and tell other people we're like one superhuman because what she does well, I don't do well. What I do well, she doesn't do well. And so we kind of mix together very well to make a good, I guess, a good person to be able to run a business.
Yeah.
And that's where like I said, we've
think
been very
I
blessed.
saw that on Laura's LinkedIn profile. The two people, one superhuman. Forget what you referred to the partnership as, like a separate business. Do you know what I'm talking about, Laura?
Oh, I guess I need to review my LinkedIn.
That's okay. We'll look at it during the break.
Okay.
But let's start with some background on each of you. Mike, tell us about your education and where you went after that.
Well, I actually went to George Mason University, and I got an electrical engineering degree. And when I came out, I worked in the IT field, so I had a lot of IT jobs. Got to the point where it was kind of like, okay, these startups aren't really starting up, and I wasn't really being fulfilled in doing that. And again, we had just gotten married, and we decided, we need to do our own business. We need to do our own thing because it just made more sense. We both kind of had that entrepreneurial spirit, and so that's how we got started in our first business, which was a franchise, and we did senior home care, and we've grown ever since then with a lot of business education. We've made a lot of mistakes. We hope other people can learn from our mistakes, and we like to be able to help people out to kind of improve themselves and learn from our past. So
that's great. I found it, Laura. It's Team Pierce.
Oh yeah, we are Team Pierce. Not a very hard. Yeah, that's very simple branding.
Yeah, we'll talk about all the companies that you run and all the different types of businesses and customers that you have. But why don't you tell us where you started and how you got from there to here?
My humble beginnings. I was born an entrepreneur, and I think my grandmother encouraged it. She told me when I was probably maybe in kindergarten never to work for anybody. She had her own business when she was a widow, and she always kind of instilled in me the ability to be able to do anything. And so I'd say I took a lot of business classes. I think I learned more on the job than I did anywhere else, and did a lot of sales. The reason why I thought it was a better idea for us to start a business was my company was being bought out by a much larger multinational company, and you get tired of being kind of tossed around, and I didn't fit in their culture. They were, well, let's just say there was just two Christians. It was myself and Ron, and we found ourselves out the door. Yeah. So that's when Mike and I started looking at businesses, and senior home care really spoke to us, just because I helped out my grandmother, and it is a service business, and our goal was to keep people in their own homes, and we did that very successfully. What
was your grandmother's business?
She was in insurance.
Oh, okay.
So she did a lot of commercial insurance back in the 40s, 50s,
wow.
60s. So
it was unusual for women to work outside the home at that time, so she must have been cutting ground.
She was, and she definitely was she was a go-getter. She was very spirited, let me put it that way.
I love that. Yeah, my dad's mom had a dress shop, and that was during a time when the wife was not supposed to work outside the home. But in the family, she had the nickname the General, and so she got to do what she wanted. She was very lovely to us grandchildren, but I think that she was a disciplinarian to her own children. So I noticed by looking at your LinkedIn profile that y'all have lived all over the country, it seems. Where did you meet, and how did you find your way to San Antonio?
Well, I mean, Laura has traveled more than I have. I mean, I've only lived, I was born in West Virginia, moved to Fairfax, Virginia. From there, we ended up going to Utah, southern Utah, and then to San Antonio. So those are the only places I've lived. Laura has been other places, but we met in Fairfax.
Okay.
Is where we met. And again, we started our businesses. And then what happened was my family had to move to southern Utah for health reasons. And so since they all moved there and my parents moved out there to be with the grandkids, we knew that I was going to need to provide some assistance to help my sister as she cared for her children, and then also for my parents. And so we sold all of our businesses and moved to southern Utah and helped out there. And actually, we bought a business in Vegas and had that for a little while. And then once my parents passed, it was kind of like we could go anywhere we wanted to. And Laura was like, well, I'd like to go back to Texas, but I don't want to go to Dallas.
Okay.
So we came to San Antonio.
I love that reasoning. I'd like to go to Texas, but not Dallas.
Sorry, Dallas, Texas, USA, one word, but
Right.
San Antonio's our home.
Okay. Well, we got to take a break. When we come back, we'll be talking about lending, loans, and business.
Secure your future today with Marquardt Law Firm. Gain peace of mind with a free consultation, crafting wills, trusts, and vital estate plans, guidance on elder law, Medicaid, veteran benefits, and more. Shield against legal hassles with their defense against Medicaid estate recovery. Trust in their proficiency for business law solutions, contracts, incorporations, and more. Empower your tomorrow. For info, go to marquardtlawfirm.com. That's marquardtlawfirm.com.
9:30 a.m. The Answer.
Welcome back to Talk Law Radio. I'm Todd Marquardt on the radio, on podcasts, on Facebook Live, and on YouTube. Go to YouTube and search for Talk Law Radio and look for the Lady Justice and the red, white, and blue logo and click subscribe. And those YouTube videos are shorter. You can watch this program in 4 segments while you're walking the dog or while you're doing the dishes. And just let me know if you have any questions about lending, loans, or business today by calling the radio station live right now on Saturday, August 24th by dialing 210-308-8867, 210-308-8867. Supposed to say it one more time, 210-308-8867. Or you can text Todd at 210-538-4770. If you don't want to talk on the phone and you're just sitting on the couch, you want to text your question about lending, loans, and business, text Todd at 210-538-4770. Okay. Tell us about U.S. Capital Lenders.
Well, what we do with U.S. Capital Lenders is commercial financing. So we help businesses get access to the capital they need to either start a business, maybe expand their business, maybe the equipment they need, maybe it's commercial real estate. They want to be an investor and do investment properties, or they want to do fix and flips. So we as brokers have access to hundreds of different lenders. So we're going to find the most appropriate loan to fit whatever situation that it is.
Okay. How are you different from a bank?
Well, we're not a bank because we're brokers, so we have access to a lot of other lenders, a lot of non-institutional lenders. Also, a lot of the lenders we work with, they don't take deposits because with banks, banks take deposits. That's really where they focus on because they actually need to have the money coming in before they can lend it out. Mm-hmm. And so with all the regulations that they're under, they have to have so much in deposits before they can lend so much money out. So that's a lot of their restrictions.
It's a lot stricter too.
Yeah. And so with some of the lenders that we work with, they're non-institutional. They may be investment groups. They're free to lend out their money how they see fit, so to speak. So there's a lot less regulation. And again, they're going to be very careful as to how they lend out their money. But they'll look at the bigger story. They won't just look at numbers and just say, okay, well, your cash flow isn't that good. Your credit isn't that good. You don't have enough time in business. And so that's where banks usually have their problems. But with our lenders, they'll look at the bigger story. This is an opportunity that has a lot of potential. Maybe you have a lot of assets that they could use as collateral, and they're willing to use that to be able to lend the money. Maybe they kind of believe in what you're doing. Maybe it's maybe a disadvantaged business, and so we have lenders that work in that space that can help out. So a lot of different options for our clients.
Yeah, there's some. If you just Google business loan and you're searching the internet, you're going to find lots of different things. What should people beware?
I could tell you, don't answer your phone and take one of those loans from somebody who's soliciting to you. We never do it. And there are a lot of predatory lenders out there that do it. There's a lot of scams out there where they'll ask you to send, $10,000, $14,000, and you can get up to $200,000, and then you never hear from them again. That has, we've crossed that before. Yeah. They've actually used our business name, saying that they represented our company, and we're like, we don't make outbound calls. We work by referral.
Okay, what are some of the scams?
Well, a lot of them will be because, again, most all business owners are always kind of in need of capital somehow. And so they'll call up and they'll say, hey, listen, you've been approved for $25,000. We can get that into your account in the next couple of days. We'll send you the application. You send that back to us and, give us, $10,000 and we'll transfer the money over to your account. Yeah, that's kind of common with a lot of these scams that are taking place. And again, some of these loans that when they're looking at, they're kind of high interest loans. I mean, we've seen loans that are kind of in the 25-30% range for these loans. And
that would be illegal, probably.
No, not really. I mean, they can charge, whatever.
It depends on the state.
Well, yeah, it depends on the state. But I mean, whatever rate that they want to be able to charge, they can certainly charge that. I mean, again, there are a lot more laws from a predatory standpoint that regulates that. But for the most part, 25% is not. I mean, look at your credit cards. I mean,
yeah, right, 18%, 22%.
Yeah. So.
Okay, so what's the advantage of going through U.S. capital lenders rather than a bank or credit union?
Well, the banks are limited to what they can lend because it's their money that they're lending. So like I said, we have access to a lot of different lenders. So we're going to be able to shop that around. We'll be able to go out and show this to several different lenders and see who's going to be able to give us the best rate. Maybe it's an origination fee that we can reduce. Maybe it is an interest rate that we can reduce. So any of those things we're going to kind of look at. Whereas a bank, they're pretty set. I mean, they have their interest rates. Here's what we can do, and that's pretty much it. So we have other options for people to be able to look at.
I heard this term from a real estate investor about hard money loans. What does that mean?
Well, the hard money loans are against a specific asset like a house.
Okay.
And so their only determination is how much is that house worth, is how much money you're going to get. And let's say, it's worth $200,000. They may give you, if that's what the value is, they may give you 70% of that value. And again, those types of loans are generally short term and they're usually higher interest rates.
Oh, okay.
So, because again, a lot of times when people want that, because I mean, on some of those, you can get that money within a day or two, sometimes the same day. So it's fast money. And that's the other thing. If you want your money fast, you're probably going to pay a little bit more for it, and you're probably going to pay a little bit higher interest rate. And that's just because the convenience of getting the money quickly. So the hard money loans are basically just on the asset, and and again, they're usually going to be a higher interest rate, and it's usually short term.
Okay, so somebody that's going to flip a house, that they want it to be short term anyway.
Exactly.
Yeah, but there's better ways of doing it. I mean, we do have fix and flip programs that can loan up to, depending on your experience, anywhere from about 75% to I think 80% of the value of the home, and then they'll also factor in there the renovation costs, and then some of them will even turn that into a long-term loan if you want to turn it into a rental.
Yeah.
So, I mean, we listen to what people are going to be doing with that piece of property rather than just saying, here's the loan and we'll see you on the other side when you need to, if you need to refinance it. Money is precious to us, and we don't like wasting money ourselves. So we have a principle of doing no harm. And that's one of the things that we've always.
I love that.
Yeah, well, we want to leave it better than we found it. I mean, that's how we ran all of our companies. I mean, even when we'd have a meeting at some place, we'd leave the place cleaner than we found it.
Right.
And people were like, wow, you guys did a good job. So we want to, keep that, do no harm.
Yeah.
I like that. Do the lenders that you're talking about for the fix and flip program and for, say, buying a commercial building, do they have the same similar requirements that a bank would, where you have to have inspections and
they're going to have a lot of the
that.
same requirements. Sometimes maybe a little bit less restrictive sometimes, but yeah, a lot of the requirements are going to be the same. And again, maybe the cash flow isn't. A bank has a certain level of cash flow that they need to see. Some of our lenders, they can take into consideration. It's a lower cash flow, but they can still lend against that. So.
Mm-hmm. Okay. And it's not just for real estate. You can find loans for a business that needs to buy equipment, right?
Yes, exactly.
And
leasing.
Leasing?
Yeah, we can do leasing. We have a program that can be done in as little as 4 hours. And we can do leasing up to, just application only, I think $75,000 and lower. And
so any kind of equipment, whether it's, construction equipment, maybe it's what they call yellow iron, the big yellow trucks,
right.
Down to just a panel van. If somebody needs to add some trucks to their fleet, we can certainly be able to help out in doing that. Maybe it's a restaurant that needs to get new equipment in. The other equipment's old, and they just need to get new equipment in. We can certainly help them be able to finance that and to get a lease on that.
Home-based cottage businesses, we have a loan program for that. That's specifically for that group of people because they start out really small and they need to expand. So we found that resource. You
have a lot of people that do may do pottery, or they're doing
honeybees.
Yeah, and ones that do. I guess advertising, what is it?
Promotional items.
Promotional items, yes.
Okay.
The equipment they use to be able to do that. We could certainly, if they need to expand or replace something, we can certainly help them out in doing that.
Wow, that's a lot more than what I was thinking of. I was thinking of copiers.
It could do that too. But yeah, you kind of look around this room. There's a lot of tech equipment here that could be financed if it needed to be. So, and if somebody needs cash in their business and they have a lot of equipment, we could certainly do what's called a lease back and be able to get the cash out of that equipment that they could be able to use. So that's another kind of solution to be able to help cash flow with a business.
Okay, well, let's talk about some other reasons that business owners would need cash and how they can get it, and then what are their responsibilities to pay it back.
Well, you're supposed to.
Yeah, right. But
it is biblical.
There's different programs where they have to pay. You were talking about somebody that might have to pay daily. That's probably something to watch out for.
Yeah, they're merchant cash advances, and again, they have their place for being able to improve cash flow and help businesses. But a lot of times, businesses start in on those cash advances, and it just kind of starts getting out of control. They're higher interest rates. A lot of times, they're daily, weekly payments. It's based upon kind of your credit card charges that you're doing, and it just kind of gets out of control. And then next thing you know, you're just swimming in debt. And we have programs that we can convert that to a term loan, a monthly payment, improve cash flow, kind of get that monkey off your back, so to speak, on having to make those payments all the time. So there's a lot of businesses out there that are kind of swimming in that and struggling with that, and we can certainly help them out.
Okay. Well, if you're a business that's drowning in debt and you have a question about how you can get out, call us right now, live today, Saturday, August 24th at 210-308-8867, 210-308-8867. And maybe we can answer your question.
Yeah, be happy to.
How to get out of debt. We're going to take a break in just a minute or two, and then I'd like to ask you about other ways that you can help businesses improve their bottom line and maybe get out of debt. I was researching these issues on the internet, and the site Reddit.
Mm-hmm. Yes.
Well, it's like a question and answer, and I found somebody was asking about these loans. Is it a good idea to do this or that? And the answer was, no, don't get into debt. You'll be worse off than you were before. And that's also somewhat biblical. The debtor is slave to the lender.
Yeah.
But it has its place.
It
Yes.
does.
Help you get started, or it'll help you grow, help you continue to help improve people's lives. I
Yes.
mean, that's why we're here, is to have a good impact on people's lives. Well, we got to take a break, and when we come back, we'll start talking about some of the other businesses that Mike and Laura have and how they might be able to help your business. So stay tuned. Welcome back to Talk Law Radio. I'm Todd Marquardt, on the radio, on podcasts, on Facebook Live, and on YouTube. Today I'm talking to Mike and Laura Pierce about commercial financing. We talked a lot about that last segment, so if you missed it, just find that Facebook Live video or find us on YouTube a little bit later on this week. This segment, I want to devote more toward some of the other businesses that they run. I would call you guys serial entrepreneurs. One thing that you did in your past was senior care. Tell us about that experience, and tell us about how you help people that are interested in franchises.
Well, since we have a really strong background in senior care, we have developed a new company, KPI Queen, which is also driven by DDS Metrics, which is our own proprietary dashboard. And what we do is we help home care companies that are struggling out there to become more profitable. We work a lot with independents as opposed to the franchise brands. So I guess kind of our goal is to bring franchise-level resources to the little guys and help them be able to grow their business and be more profitable and sleep at night. We know that it's a very difficult business, and sleep is valuable. So we we help people be able to figure out what's going on in their business, trim the fat. I mean,
and really understand their numbers, because
Yeah.
a lot of people, business owners, they have a business, they just don't understand their numbers. They don't really know what's on their balance sheet. They don't know how to read their profit and loss. They can't make business decisions necessarily off of those kind of numbers, which they need to be able to do. A lot of people, they have money coming in, and then they see what's in their bank account, and they're just kind of like, well, why don't I have,
Why don't I have more?
Yeah, why don't I have more?
Right, which can be explained in a quick ratio. That's, your liabilities divided into your assets versus assets into liabilities. I'm dyslexic.
There's a ratio.
There is a ratio. And, basically it's telling you for every dollar of assets you have, X amount to pay for your debt. And, if you have it below 1, you're in trouble. And that's what a lot of banks look at. And that helps us, when we're talking to people, to be able to, tell them, why you weren't, quote unquote, bankable to the banks. We might have to step back a little bit and, restructure debt in order to get that cash flow in.
Yep.
Or help figure out ways to improve your collections. That's a big one right there, is collections. A lot of people do not, they don't watch their
accounts,
receivable very carefully. And that can certainly get you into trouble pretty quickly.
So you've worked in a franchise. That was the senior care industry when you were in West Virginia?
Virginia.
Yeah. And you've also been helping businesses that are not in a franchise. So you know both how franchises work and how independent businesses work. And because of your work with the senior industry, you wrote an ebook.
I did. It's called Senior Care Simplified. It's not simple, but I thought that was a good, catchy title. We're going through it with my parents right now. My dad has frontal lobe dementia, and what works today doesn't work tomorrow, and it's really difficult. And I think a lot of families struggle with things like taking away the keys. How to care for someone with dementia. You can't. You need to watch them.
If somebody wants that book, how can they get it from you? Can they
Well,
email
we can put a
you?
direct link on your website if you'd like.
Okay. But if
Yeah,
they're listening right now.
Yeah, it's kind of like fresh off the press, so to speak, because Laura has just
I finished it like 3 days ago.
Oh, okay.
So it will be up on our KPI Queen website probably by the end of this upcoming week, I guess.
Okay. What's the address for that?
And it's www.kpiqueen.com.
Okay. And so are you the KPI queen?
I am. I even made myself a little paper hat. I walk around, do the little wave. I love KPIs, and that was transformative.
Let's define what that is.
Well,
KPI.
Okay, key performance indicators. It was, I would say, pretty much an awakening when we had our business back in 2007 and 2008. Everything started to fall apart. We were losing business. We weren't making any money. I took a class called Financial Management for Non-Finance People, and then we also educated ourselves with a Profit Mastery course. And we started looking at each and every one of our expenses and how raises were being done for our employees and how our employees were performing. And we started putting in different metrics for each of them, and we began to see an increase in our business actually went down, but we ended up making more money just by using KPIs and understanding, how to more effectively use our capital and get the most out of our business. KPIs have a cascading effect, and once you start looking at that top and you start digging deeper, you're able to really streamline your business and make more money. I mean, that's why we're in business.
Yeah, and one of the businesses that you have is the franchise broker. Is that what it's called?
Yes. Yeah, professional franchise brokers.
Tell us how that works.
So, when we ended up selling our businesses and kind of getting out of our franchise, we wanted to stay in the franchising industry because we do feel that it has a lot of value. It helps a lot of people be able to start a business and grow a business. And so we became brokers and being able to help people who do want to, maybe leave corporate America, have their own business, don't know what direction they want to go in or what they want to do. And we would help them find the franchise that would best fit. Because a lot of times people think, well, I want to do what I'm passionate about. And that can be good. But, sometimes, you need to understand what your ultimate goal is. Your ultimate goal is that you want to be able to replace your income, be able to retire, pass this business down to your kids. Maybe what you're passionate about may not be the one you want to get into. If you're passionate about baking and you open up a bakery, now that you've been baking every day and been involved in that, after about 10, 15 years, you're probably like, I don't want to do this anymore.
Yeah.
So it is understanding what the real goals are for them, and so we can help them find the right franchise to be able to do that.
What are some good questions that you ask people that are interested? How do you unsurface that? How do you surface that?
Well, a lot of that is going to be defining, what their goals are. What is it that you want to accomplish? And we talk to business owners because we'll do some business coaching as well. And it's understanding, what does it look like in the end? When you start this journey, what do you want that to look like in the end? And it could be, I want to build this up in the next 5 years and sell it. It could be, I have kids and I want them to be in the business and I want to pass it down to them.
But you got to ask them first.
Yeah.
We get a lot of people, I don't want to do that.
So it's really understanding what those goals are, and then understanding from a financial standpoint how much are you willing to put in? Because again,
Right.
owning a business is a risk. It's a risk reward. You have to understand the risks going into it, and if you understand that and you know how much money, and think about it, it's like, okay, if I put this money into the business and within a week something big happens and I lose all my money, am I okay? Would I be okay with that?
Yeah.
You kind of have to look at it that way. Not the idea that you're going to fail, but you have to kind of look at those kind of scenarios. So understanding what is their level of risk that they're willing to do and how much capital they're willing to put into the business. So,
Yeah, I always figured whatever happened, I would probably be okay. There's other things that you could do. Start from the ground up. Y'all have done it several times already, right? Started something.
Start it, sell it.
yeah.
What are let's see if anybody wants to ask a question about franchises. You can call the radio station right now, Saturday, August 24th, at 210-308-8867, 210-308-8867, or you can text Todd at 210-538-4770. That's 210-538-4770, and we can answer a question about franchises. One question, I've reviewed franchise agreements before, and I've helped clients through that process. One thing I always point out to them when I'm talking about their rights and responsibilities is the royalty.
Yes.
So that's something that they have to pay based on the production of the business, in addition to whatever they paid to buy in.
Correct.
Right?
Exactly.
And so what are some...
Well, we call it the long-term cost of ownership versus that short-term, which is that initial franchise fee. I mean, we worked with a gentleman who said, well, I'd rather pay $10,000 for my franchise fee and pay 10% royalty as opposed to paying the 6% and a $30,000. In the long run, if you're successful, you're going to end up paying more than your $30,000 in your initial franchise fee. So we look at the whole picture of what it takes to get into that franchise, and what does it look like? Is it going to be home-based? How quickly is it going to ramp up? And also looking at that item 19. One thing that we complain about a lot on the item 19 is it's not very standardized. So it's really hard to read those tea leaves and find out just how is this franchise performing. We recommend talking to a lot of different franchisees and asking questions like, is your franchisor supporting you? Did they deliver to you what they promised? Do you feel you get good value for your royalties? And I can tell you as franchisees, we would say no. But it was the cost of doing business.
Yeah. Okay, well, we got to take another break, and when we come back, we'll talk about legacy, whatever that means to you guys. And stay tuned, and we'll be right back.
Secure your future today with Marquardt Law Firm. Gain peace of mind with a free consultation, crafting wills, trusts, and vital estate plans, guidance on elder law, Medicaid, veteran benefits, and more. Shield against legal hassles with their defense against Medicaid estate recovery. Trust in their proficiency for business law solutions, contracts, incorporations, and more. Empower your tomorrow. For info, go to marquardtlawfirm.com. That's marquardtlawfirm.com.
9:30 a.m. The Answer.
Welcome back to Talk Law Radio. I'm Todd Marquardt, on the radio, on podcasts, on Facebook Live, and on YouTube. You can listen to this program on YouTube. We break it down into 4 different segments so that you can watch it while you're doing the laundry or washing the dishes, walking the dog, or just waiting for the bus. So go to YouTube and search for Talk Law Radio and look for the Lady Justice and the red, white, and blue logo. We're going to be talking about legacy this segment because Marquardt Law Firm focuses on last wills and living trusts and tax-protected inheritance plans.
And now, it's time for the Talk Law Radio Legacy Spotlight. What's your legacy? Sponsored by Marquardt Law Firm.
So, have you been thinking about that question? What does legacy mean to me? And
yeah. I mean, we've kind of thought about that, and it's kind of hard. We actually don't have kids, so we don't really have much to be able to pass down. But I mean, for us, I think our legacy really is we want to be able to help other people realize their dreams. So anything that we can be able to do, whether it's starting that business, growing that business, or just anything to be able to help them, be successful. So that's kind of the legacy I think we'd like to be able to have, is to say that we've been able to help other people become successful.
And we've done no harm.
There's probably people that have told you that before, right? They say, thanks to Mike and Laura, my business is successful.
Yeah, I mean,
Well, we just helped a gentleman sell his business in Connecticut, and he was in a really bad franchise, and he's happy now, and he's going to be going into a new franchise that we recommended to him that was a lot more suitable for his style. I mean, he's the salesman, but he's not the paper guy, and this other business was very administratively heavy, and now he just gets to go out and sell, and he's supported by a very good franchise system.
Yeah, that's great. Having those wins, having those customer say thank you.
Yeah, exactly.
Okay, well, let's go back to commercial financing, because I remembered I had a prospect call the office to get some business advice because he had wanted to buy a franchise, and so he was looking for a loan online, and he clicked on this site and talked to some people, and they said they could get, I think it was $50,000 that he needed for his franchise buy-in, and they said, we can get you $50,000 so that you can make that buy-in. And what he got back was a stack of credit cards.
Yes.
Tell us what would you call that?
That is called credit card stacking. So what they do is they will apply for, however many credit cards they can. They'll apply for ones that have the 0% interest for 12 months.
That's their hook.
Yeah, that's their hook is 0% interest for 12 months, and that you can get a large credit line on that, and stack those together, and and chances are if he had 7 credit cards, he probably had $7,000 of line of credit on those that they were able to do cash withdrawals from. And that's the idea is you get these cards and you take the cash out on those cards, and you have that for a year for 0% interest. And
well, wait a minute, you still have to pay 3%.
But you still have to pay.
And that's the other thing people don't realize. There's a 3%
the fee
to turn it into cash.
Yeah.
So it's not free.
Well,
plus you have to pay for them to do it, which is something you could do yourself.
But in this case, he didn't know that that's what they were going to do. He thought it was a loan,
right,
for the $50,000.
And that's kind of the problem. If they're not upfront about it and they don't tell you that it's credit card stacking, then you run into that.
I think your biggest clue is they want you to set up a separate email address and a password so that they can refer it back. And if you have to go ahead and okay something like this is me, that's the chance that you're doing credit card stacking. There's a place for it, but it's really there's better ways of doing things than doing a credit card stacking.
Yeah.
And it can also tank your credit.
Yeah, that's the other thing. We were talking to an individual just this week where he started his business and he did the same thing that he didn't really know, but he had like an 800 credit score, and then once they did that and got him, I think, 4 or 5 credit cards for his business, he ended up having a 620 credit score, and he's kind of been digging out of that because he's asking us about getting some financing to kind of continue his business a little bit, and certainly we'll be able to hopefully find him something, but with a 620 credit score, it makes it a lot more difficult. So
right, but as you were saying in the first segment or the second segment, maybe some of those commercial lenders will understand the problem that he was in. It was sort of artificially caused.
Right. And we certainly can be able to help them work their way out of that as well, because we do have like a tool that we allow businesses to use to help them build their business credit. And we didn't really talk about that too much, but there are ways to build your business credit to keep it away from.
Well, if you can, say something about that.
Yeah. So we do have a tool. You can go to our website, uscapitallenders.com. And we'd have it's a do-it-yourself tool that helps you build that business credit. It gives you everything you need to start establishing your business away from your own personal credit. Because most of the time people are getting loans and everything on their personal credit. You want to start building up that business credit to be able to get those loans through the business. And it takes a little bit of time too. But we do help people be able to do that as well.
And it also has lifetime credit monitoring with it. So you're able to monitor your business credit, correct?
Yeah.
Yeah. Okay. I just want to make sure I didn't misspeak. So, I mean, it is a really good product. I mean, you can do it with our guidance, which, we would charge, of course, but there is a do-it-yourself tool that has proved to be very helpful.
Okay, that's interesting. Never heard of that before. Again, we're talking about commercial financing, loans for businesses, and how U.S. capital lender is different than a bank. Say again what the difference is for the people just now tuning in.
Well, banks are very specific. They have their own. I mean, they have a set of interest rates that they have. They have their own money. They have their own regulations that they have to follow. With us, we are brokers. We have access to hundreds of different lenders that can range from investment groups to non-institutional lenders that look more at the story. They don't look at just the numbers of how much cash flow you have, what's your credit score, how much time have you been in business. They'll look at the bigger story and be able to make those decisions. They have that flexibility to be able to do that.
And sometimes banks will not lend in a certain segment. So,
Yeah,
for
exactly.
example, restaurants. A lot of banks are very nervous about loaning to a restaurant because there is a high failure rate. So, I mean, we're kind of, I guess, agnostic when it comes to whoever we're working with, and we will find a lender that will work in that category or segment.
Exactly.
Good point. Yeah. One of the big construction companies has been in the news for having a bad deal and going into bankruptcy. And so I've heard some of the banks in town are nervous about lending to construction companies.
Depending on construction, but take oil and gas, for example. I would say several years ago, that was big. I mean, lenders were falling all over themselves to lend in oil and gas. Now, that industry, it's hard to find lenders. I mean, we have a few lenders that can still lend in that industry, but a lot of banks, a lot of lenders kind of shy away from that. So yeah, it just kind of depends on the economic cycle as well.
Yeah, it's good to have another source of funding besides traditional banks and credit unions.
Yes.
And
it is. I'd have to say that most of our referrals do come from bankers because they want to help their customers. And we're not saying banks are bad. We've never said that. Banks have their place. They do get you better rates than sometimes what we can get because, well, they're the bank. But we do work a lot with bankers who may not be able to lend to that restaurant or the business hasn't been around long enough. So we are able to kind of fill that void, and they're able to keep that relationship. And I think that's very powerful because, your banking relationship is very important.
Yes. And the idea, too, is to get them bankable so they can go back to the bank where they can get the better deals.
Awesome. Y'all are like a hidden gem I didn't know about you. There's a lot of business people out there that would love to realize their dreams and start a business and probably have some great ideas, and they just don't know how to get started.
Yeah. And we're happy to help out in any way we can.
We can also turn a business into a franchise. We're working with a local business right now that is looking to franchise their business.
Yeah, I'm sure that's difficult to do.
Yes.
Not really.
There's a lot to it.
There's a lot to it. Okay. One last thing that I wanted to talk about was how you help businesses offer benefits.
Well, we are a solutions type company, so we want to be able to find solutions that are affordable, that don't really impact margins too negatively, and we came up with a product that is geared mostly in the service industry. It's not health insurance, but it is a
employee benefit.
Yeah, it's an employee benefit. It includes zero deductible telehealth and telemedicine. It also has roadside assistance included in it, identity theft protection, and it starts off at a low $34.95 a month at the lowest tier, all the way up to I think $54.95, which includes a really good, robust prescription plan. Yeah, exactly. And it, I've run the numbers on different industries, and it really is a good retention tool because we hear a lot of times people quit, and we have caregivers go into my parents' house. And they lost a really good caregiver because they didn't offer any benefits. And we're like, okay, we had the same problem when we owned our company. So we worked with some companies and we kind of put this all together and we came up with this program. And it also has a lot of good discounts as well for things that you buy every day, as well as, attractions, travel, et cetera. So it's a very good program that is geared toward that part-time worker because you really can't afford to give part-time workers benefits. And then we also have insurance programs for gig workers or people who are 1099 and very affordable. I mean, because that's what we do. I mean, we're in the same boat. So we researched and found these products so that we can help not only ourselves, but now we can help others. We are licensed agents. Texas, Florida, Oklahoma. No, not Oklahoma. Ohio.
Okay.
One of them O states.
Right. Well, thank you guys so much for joining me today. I had a lot of fun learning about how you help business owners.
Oh, well, thank
Thanks.
you.
Yeah.
No, we had a lot of fun too. This is great.
Yeah, so you need to do some more promoting because I really think that a lot of businesses out there could be helped.
Yes. Yeah, definitely so. And we're trying to get out as much as we can. We're only 2 people, so.
Right. But you have a Facebook page, Instagram page.
Yes, we have a Facebook page, Instagram page. We're also on X. Not a whole lot on X. I mean, we're also older, so trying to get into that social media stuff is kind of a challenge for us. But we're working on that. We're getting better at it.
Yeah, we're still working on how to text with 2 fingers.
Is it easier for people to find you on social media or U.S. Capital Lenders?
LinkedIn
Yeah, LinkedIn, social media.
Mike Pierce.
and Laura Bailey Pierce.
Laura Bailey Pierce on LinkedIn. That's it for today. If you have questions about business, call these guys. I'll talk to you later.